mother, wife,
Air Force veteran,
gun rights advocate.
This is Stacy on the Right. Here's your host, Stacy Washington.
We are back. I'm situated, and I'm glad to be back with you. Thanks for hanging in there because we've got something really important to talk about. I'm Kira Davis filling in for Stacy Washington, and you are listening to Stacy on the Right. Okay, I'm going to pull it together, everybody. This is live. This is how it goes sometimes. But our next guest is somebody I'm really interested to talk about. Welcome to the show, Jay Young. He is the CEO of CEO of King Operating Corporation, which is oil and gas company. He's here to talk to us about rising gas prices, possibly, or what we can expect now that we've got a lot going on the world stage. Jay Young, welcome to Stacy on the Right. I'm your guest host tonight, Kira. Sorry for keeping you waiting. Thanks for coming.
Sure, no problem at all. I'm here. I'm ready. I'm ready to go. I got a lot of great answers to some great questions that I know you're going to have. So I'm looking forward to it.
Okay, great. Perfect. I was a little flustered. I had some technical difficulties coming back in, so I've got myself together. So I want to talk to you, Jay, about gas and oil. Now, two things are going on here at the same time. A lot of this stuff is coming down. People are noticing across the country, not me, I live in California, but everywhere else across the country, people are noticing gas prices are going down, oil costs are going down. But we've got a couple of really huge events that are going on right now. We've got peace in the Middle East, which of course all of our oil is connected to there. We've got ongoing negotiations with Ukraine and Russia, but we also have some tariff stuff going on with China. Can you tell us what exactly is going on? Are we in a good place for gas and oil, or are we in a bad place?
Yeah, well, yes and no. I mean, oil and gas producers are going to enjoy drilling for wells right now because the prices are cheaper, and when that happens, it costs a lot less money to drill for oil and gas right now, which is good. We want to drill. We want to buy low, sell high. So it's good for drillers. It's good for our company. So it's good for us. Now, with gas prices, and why are gas prices going down? And it's all because of oil prices that are also coming down right now. And and it's all about supply and demand. It's all about economics 101. If there's more oil on the market and the demand, prices are going to come down, and that's what's been going on. And with the OPEC situation, with what's going on with the Israel, which we're thankful for, prices did come down because that kind of frees up the geopolitics. And so people think, okay, well, we don't need as much foreign oil. And so it just kind of frees things up, and then prices go up again today. So overall, I think if you live anywhere besides California, gas prices I was in Ontario, California. I pulled up to the pump. I was trying to get in my rental car. It was 6 a.m. and I tried to find, gasoline. I pulled the pump, and the cheapest unleaded I could find was $5. $5,
Yeah.
And I'm like, wow,
Yeah.
wow.
Yeah.
Okay, well, that's a little bit.
It was
more
almost
expensive
up
than we
to
spend here in Texas.
it was almost up to 8 last summer.
Wow. Yeah,
Yeah.
I can't believe. I mean, my wife tells me we only buy premium except for in a rental car. But I can't imagine buying the most expensive out there. That would be something. But anyway, what we're seeing right now is we're seeing a lot of shale wells, SHALE wells being drilled in the Permian Basin in Texas and New Mexico. We're seeing a tremendous amount of oil being drilled and produced in the past, year. Now, what's happening and what will happen in the next year, 6 months or a year, is we're not drilling as many wells. I mean, 44% of the rigs have come off the market in the last year, which means that we're not going to be drilling for oil as much as we were before. And because of that, we're not going to see as much oil on the market. So, we're still in the United States. We need about a little over 20 million barrels a day. Our demand continues to rise. We need 20 million barrels a day. We're producing 13. We need 7 million from other countries to put in there and to offset, the amount that we produce here. So therefore, when oil production goes down by the end of this year and into next year, we're going to see a lot less oil in the market. And when we see that, prices will go back up. So don't get too used to these cheaper gas prices, because it's not going to happen, or it's not going to last forever. But it will help us right now in regards to oil prices, gasoline prices at the pump. Go fill up your lawnmowers, do whatever you have to do right now at these cheaper prices, because I don't feel it's long term. And that's all because when, Trump said, drill, baby, drill, we didn't in the United States. We, matter of fact, took a lot less rigs to drill for oil and gas off the market, which, decreases the production amount. And then the wells that are already online, they decline, 30, 40% the first year. So therefore, we're going to see a lot less oil in the market going into 2026, which means that prices will go back up.
Well, what do we need to do to increase production? Because I understand, I know that the president said that. I was very excited about it. Here in California, we've taken the second to last refinery offline. I think we've got one more. So we're definitely not. And what we do extract from our ground here in California, I'm sure you already know, goes overseas. We don't even get to use it. Why did that happen? Is it President Trump's fault, or how can we increase production, or was that literally just a thing that was said for a campaign?
Yeah, it was said for a campaign because in oil and gas companies, like ours, I mean, they're not going to drill as much, and we don't drill. And I mean, King Operating. And I like your questions. And I wrote a book called The Upside of Oil and Gas Investing. I'd love to send you a copy of that, because it's a great way to think about, my family, and also, what investors should look for in regards to putting their money to work. I mean, a lot of oil and gas companies have write-offs. All of them have write-offs if you invest directly, but you need to know how the strategy is behind that. But we're not talking about that right now, and so I'd be glad to talk about it here in a minute. But what you're asking is, what can we do? Can we increase oil and gas production? And the answer is, it's up to the oil and gas companies, like Iran, Iraq, Saudi Arabia. All the country owns the oil and gas. So if they want to drill more oil, they do it, right? It's up to the government, because that's how they make their money. They produce 6 million barrels a day. That goes right in the country's pockets. It doesn't go into private oil and gas companies. So with private oil and gas companies, and the majority of the oil right now, especially in the Permian Basin, is shale, Wolfcamp. It's fracking. It's $20 million wells. And if those don't make sense, and if you're drilling a well and it costs $20 million and you're only getting $60, or you're afraid it may go to 50 or something, you're not going to continue to drill for oil and gas because of basic economics. You have shareholders to listen to, and if the shareholders are saying, hey, wait, we're spending a lot more money to drill wells, and we're not going to get the benefit of higher prices at $70, $80, $90 a barrel, we don't want to drill. So they take rigs off the market. Like I said, it's a company decision instead of a country, like Iran or Iraq. So therefore, these countries can drill, but private or public oil and gas companies look at the economics and say, yeah, hey, we're not going to drill as many wells today because economics and oil prices are down. Shale wells need a lot more money to drill for oil and gas. Therefore, they're going to take a lot of wells offline, and that's what they've been doing in the last year. So we're not going to drill as many wells here. I can see our oil and gas production dipping down to the 12 million barrels a day, all the way from 13.2 or 3 that it is right now. I can see it going all the way down to 12, which means we don't have as much oil in the United States. We're going to have to look at foreign countries, and foreign countries, don't let them foreign countries, they go, all right, we're going to put a lot of oil and gas on the market so we can gain market share. But then again, at the end of the day, they're doing it for the money. I mean, they don't want oil and gas prices to stay down forever. they want it to stay down to knock a lot of companies offline. Sorry, I've got a cough here. But
Oh, no.
they do it because they want to see a lot of companies, drop a lot of rigs, not drill for oil and gas, and then all of a sudden they'll hike their prices up and they'll start taking that oil off the market in the United States. So prices will go up, and they'll enjoy, because they're getting market share now at these cheaper prices. So they'll continue to, sell oil, but they're not wanting to sell oil at 60. They need $70, $80. They want it. They'll get it in the future. So the answer to your question.
Well, you said here, Jay, I was looking at some of your comments on the price of oil, and one of the things you said, and I am a complete newbie, so talk to me like I'm 5 on this. West Texas Intermediate advanced near $60 a barrel after plunging 4.2% on Friday to the lowest since May. So they had their per barrel price at $60, but you're saying other countries will drive it up to 70 or 80 just to make more if they see that the price is low and the demand is high.
Right. See, and right now, demand's going to continue to increase. It's not going to go down anytime soon. They say, peak demand, which means demand will continue to go up. Peak demand is out there, and it's not going to go down anytime soon. So it's not like we need 20 million barrels a day this year. We're going to need 19 next year. We're going to need more next year and more because of people and because of our population, because of gasoline for cars, because of plastics. I mean, a third of a barrel of oil is used for gasoline cars. A third's used for transportation, jet fuel, and a third is used for plastics, asphalt. I mean, all the plastics and things make up. There's so many different products that are used for oil. So when you talk about oil, you just can't say, well, we're driving Teslas, we're going to increase our Teslas, and Ford has a good electric vehicle. Our demand is going to continue to go up. And so right now, those foreign countries are gaining market share at these cheaper prices by putting a lot more oil in the market, but they're going to continue to take some off as our production goes down in the United States. They'll gain more market share. So when the prices do, when they suffer what we suffer, if you will, those prices will go back up when our production goes down. Because when our production is going down, which it will, it's got to. I mean, shale wells especially decline 30-40%. So the wells they put on this year, which is not as many as they put on last year, but those wells will decline rapidly, meaning that they come in 1,000 barrels a day. They'll be at 500-600 barrels a day by the end of 1 year. So you're seeing a lot of that oil come off the market or decline. And there's no new oil coming on. So we're going to have a lot less oil production in the United States into this year going into 2026. And when we see that, and when we have a lot less oil here, we're at the beck and call of OPEC and them putting oil in the market. And they're going to say, well, I don't know, we do, we don't. We're not going to give you as many barrels, and then the price will be driven back up again. It's a cycle. I'm a fourth-generation oil and gas guy. My family and relatives and family reunions and everything, we talked about this forever, and it's something that it would be incredibly extraordinary if this didn't happen again, because it happens over and over again, throughout history. Does that make sense?
Yeah, no, it does make sense. We're talking to Jay Young, founder and CEO of King Operating Corporation, the author of The Upside of Oil and Gas Investing, which he's going to DM me on X, because I followed you and I definitely want to read that. But yes, no, it does it makes sense. I'm just a lay person, it makes some sense, but I know that this is a lot more complicated than people understand. But the thing I think that I keep going back to, Jay, is the idea. You guys are in drilling, right? King Operating Corporation, you guys are drillers. You drill. Am I right?
Yes, sir. Yes, ma'am. I'm sorry.
Yes.
Yeah. We drill for oil and gas. We raise the fund.
Okay. Well, then I don't understand
drill.
then what is the difference between like in California, we're always talking about oil and gas in terms of refinery power. And I think that
Right,
is the thing
right.
that most people connect the price of their oil and gas to, right? Refinery. But you are saying we're not even really drilling here the way we should be. So are we not giving out enough drilling permits, or we don't have many drillers?
As many drillers or as many people like Exxon has declined their rig count substantially. You know, they bought Pioneer, which is a big, acquisition they made last year, and they cut down rig count. ConocoPhillips, they're decreasing their rigs or the amount of wells that they're drilling right now. And when you get to refineries, that's a good point, Kara. I forgot about that. When you say refineries, we don't have as many refineries as we need in the United States. And that's the reason why we may export oil. We may produce, 13 million barrels a day, but we don't have the refinery capacity for the type of crude that we produce in the United States. So therefore, we're sending that overseas to be made into other products, gasoline, jet fuel, and so forth, plastics. And then it's coming back to the United States. So we don't have the refineries, and especially that refinery in California, that was a million a day producer, I believe, or not, maybe it wasn't 100 million. It was several 100,000 barrels a day that oil production, which California does have. It has some oil production, and those refineries are shut down. So therefore, California is like, okay, well, we can't ship that to Corpus Christi or Utah or Colorado or another place to be refined. So they have to ship it offshore, and that with the tax that you guys have in California, it just keeps your gasoline prices high. So, and with traffic and sitting in traffic, I don't know how you do it. I mean, you sit in traffic and watch your gas meter just go down and down and down. I don't know, man. That's something else. But hey, for me, it'd be great. I would love that because
it's good for you. I have an EV for that purpose. But I don't. The EV is not great for day-to-day living. I've got to get going to a break, Jay. But I want you to tell people about your book and where they can find it before I let you go. Jay Young, founder and CEO of King Operating Corporations.
Yeah, that's great. Thank you very much, Kira. I appreciate that. I wanted to talk about Landman, Billy Bob Thornton, if possible. That was one of the greatest stories known to man. That's what we do for a living. But anyway, our website is kingoperating.com. You can go on there. Matter of fact, if you're qualified investor and you're one of the next 10 people to go to our website, fill out a questionnaire there. I'll send you an autographed copy of my book. I'll be glad to. And I send a lot of them out because I want people to know more about how to scale the investments. How do we do it differently? We do it just like an institution does, but the minimum on an institution is a $25 million check. Ours is a lot less than that. People can go there and get tax benefits at the end of this year, which they love. Oil and gas because of tax benefits, but don't do it only for the tax benefits. Find a good person. And I'm hoping that when I'm talking about this and writing the book, oil and gas or the upside of oil and gas investing, that more promoters, syndicators like us do it like I do it, because we're doing it the way that institutions invest in oil and gas through the big institutional players that I know personally here in Dallas. And we do it just like them because I want clients to make money. I've been doing it for a long time. We're sold on the investors making money. And that's why I wrote the book, because I wanted to tell everybody about it. Forbes is the publisher. I wanted people to learn more about it. And, hey, we're not perfect, but we're going to give you a shot at making money. That's what a lot of oil and gas companies don't do. And that's what we do. And that's why I'm thrilled to be on your show tonight, Kara, and appreciate it being here. But it's kingoperating.com. If you go on there and click and you answer the questions or fill out I would love to send you an autographed copy of the book tomorrow. And that's it. I enjoyed being here. If there's anything else I can answer, I'm an open book.
Well, I'll tell you what, I'm just a guest host tonight. You regular host is Stacy Washington. I will tell her to have you back, but I will also reach out to you personally and have you on my personal podcast
please.
so that we can talk about Landman. We definitely should talk about that.
That's great.
Show.
I love Stacy. I love her. I love her Christ. I love her Christian beliefs. I love your Christian beliefs, which I know you have. And I love that.
Yes.
And as a matter of fact, Stacy's been on my podcast before, the Jay Young Show. And I'd love to have you on too, Kara. So let's please stay in touch.
Great.
And, DM me on anybody can DM me on X. And I'd love to stay in touch with people. And this is my joy in what I'm doing. I'm in a great place right now because we have some great assets. We have some great people in our company that have been, in the oil and gas business for a long time. And I'm just very, very blessed. So thank you very much, Kara. I really appreciate you having me on.
Oh, it's my pleasure. It was a great pleasure to talk to you, and I'll be in touch, and we'll talk soon. Take care. God bless.